Hey everyone, and welcome back to the Tesla Stock Podcast. Elon Musk just threw down the gauntlet, essentially telling shareholders, "Pay me what I want, or I'm gone." This comes just as a prominent analyst has slapped a strong sell rating on the stock, calling the recent rally a complete mirage. Yet, beneath all the drama, another part of Tesla's business is quietly dominating a critical market. With the stock now trading around the $439 mark, we need to unpack the threat, the downgrade, and the surprising success story. Let's start with Elon Musk, seemingly saying the quiet part out loud. As you know, Tesla shareholders are about to vote on a new, incredibly controversial compensation package that could be worth up to $1 trillion. While the sheer size has grabbed headlines, many analysts have pointed out serious flaws, including the fact that Musk could still receive tens of billions of dollars even if Tesla delivers below-average market returns, thanks to some surprisingly easy early milestones. When a commentator on X raised this exact concern, Musk didn't address the substance. Instead, he deflected, boasted about Tesla's market cap, and then dropped this line: "Which of those CEOs from other automakers would you like to run Tesla? It won't be me." This is a direct threat. He is explicitly tying his continued leadership of the company to the approval of this compensation package, warts and all. It perfectly encapsulates what some are calling the Tesla dilemma. The company's current astronomical valuation seems entirely dependent on Musk's promises about future self-driving and robots, even as his actions arguably harm the core, profitable car business. By making this threat, he's forcing shareholders to choose: approve a flawed, potentially record-breaking pay package for below-average performance, or risk losing the very person whose narrative is keeping the stock alive. It's an extraordinary power play that puts the concept of CEO accountability into sharp relief. While Musk is playing hardball with his own shareholders, some on Wall Street are calling his bluff. Our second story is a scathing new analysis that downgrades Tesla stock to a strong sell. The analyst argues that the recent surge in the stock, fueled by the record-breaking Q3 delivery number, is completely misleading. They contend that the 497,000 deliveries were not a sign of organic demand growth, but simply the result of the expiring $7,500 U.S. tax credit pulling sales forward. They point out that Tesla's actual production has been declining, and its global market share and pricing power are tangibly eroding due to fierce competition, especially from China. The core of their argument is that Tesla, like NVIDIA, suffers from extreme revenue concentration, with almost everything dependent on the automotive business. But unlike NVIDIA, Tesla's core product line is much further down its life cycle and is facing existential competitive threats right now. The analyst argues that relying on unproven, far-off revenue streams like FSD, Optimus, and robo-taxis to justify the current valuation, which stands at a staggering 260 times adjusted earnings, is a massive gamble, not an investment. They acknowledge the potential upside, but believe the near-term risk is simply too high, concluding that investors should take the bulk of your gains and get out while the going is good. This is a stark, fundamentals-based counter-narrative to the prevailing AI hype. But while the car business faces threats and the AI future remains uncertain, there's another often overlooked part of Tesla that is delivering real results today. Our final story takes us to the United Kingdom, where Tesla has quietly built a dominant position in the crucial grid-scale battery market. New data shows that Tesla's Megapack batteries, combined with its sophisticated auto-bidder trading software, are consistently outperforming competitors, including energy giants like BP and EDF, in terms of revenue generated per megawatt. Tesla has supplied its Megapacks to 20 large battery projects in the UK, and its auto-bidder software trades the power for 16 of them. Those 16 projects made up 16 of the top 20 best-performing battery units in the country over the last year. Experts say Tesla's success comes down to its advanced software, which dynamically adjusts bids to optimize revenue along with the slightly larger storage capacity of its batteries. This is significant because grid-scale storage is absolutely critical for stabilizing power grids as they transition to renewable energy sources like wind and solar. While Elon Musk battles politicians and hypes robots, Tesla Energy is methodically executing, building a powerful, profitable business in a rapidly growing and essential market. It's a tangible success story that often gets lost in the noise. So, to sum it all up, Elon Musk has explicitly threatened to walk away from Tesla if shareholders don't approve his controversial, potentially flawed trillion-dollar pay package, adding a huge layer of CEO risk. A new detailed analysis presents a powerful strong sell case, arguing that the recent rally ignores fundamental weaknesses in the core auto business and relies on an unjustifiable valuation. And yet, quietly and effectively, Tesla's energy division is dominating the strategically vital UK grid battery market, proving it can execute and win outside of the spotlight. This brings me to my question for you. What does this collection of stories tell you about the state of Tesla today? Are you more swayed by the CEO's threats and the analysts' warnings about the shaky fundamentals of the core business? Or do you believe the quiet success of Tesla Energy, combined with the long-term AI potential, justifies ignoring the near-term noise and the sky-high valuation? Let me know which narrative feels more compelling to you right now in the comments below. As always, if you found this breakdown valuable, please hit that like button, subscribe to the Tesla Stock Podcast, and be sure to turn on notifications so you never miss an update. Thanks for listening, and we'll see you next time.